Hi and hello, and thank you so much for tuning in. And if you are new, welcome to my channel. My name is Preeti Rao and I am both a real estate and a mortgage broker for close to 20 years. Today, I'm going to take a break from my LTB videos and talk about the pause that Bank of Canada took on the interest rate hikes and what does this really mean for all of us. But before we start, you know the drill. Make sure to hit like, share, subscribe, and that bell icon. It gets me motivated to keep you up to date with everything real estate. Now, if you've been watching my videos or even following the market trends, you will notice that Bank of Canada's increases are now starting to filter their way through the economy, and we're all starting to feel a little bit more pain. But that being said, I guess there is some good news here. Well, it all depends on how you look at it though, and that's that the Canadian economy is starting to slow down, at least according to the Q2 numbers. Now, from this year's GDP numbers, as they came in at a negative 0.2%, which was wildly unexpected, which means that the Bank of Canada now at least has a case for not increasing the interest rates. But this is a double-edged sword, because you're either hoping that the economy slows and there's no more interest rate hikes, or you're thinking about this from a perspective of, oh no, the economy is slowing, and that means there could be some bad news on the horizon for many Canadians. And unfortunately, that is what is about to happen, as the Bank of Canada's actions from the past 6 months, 12 months, all the way back to 18 months starts to be felt within the economy. And we are seeing this most notably in the third quarter profit results from Canadian banks, as pretty much every bank reported lower than expected profits. And this has led to two major outcomes. The first is CIBC tripling their bad debt loan provision. In other words, they are preparing for more loan losses, for more defaults, and ultimately what that means is that they are preparing for more Canadian businesses and more Canadians in general not to be able to make their payments on their loans. Now, in addition to that, we are also seeing other banks like RBC, who was one of the most profitable banks in Canada over the past couple of years. They have gone and reduced their workforce in the last quarter by 1%, and they're expected to decrease it even further by another 1% in the coming months. So what this means is that Canada's most profitable companies are looking to eliminate jobs, and this largely due to higher interest rates, which means lower profits for the banks, lower growth in economy, and in general an expectation from investors of not just banks but pretty much every other publicly traded company that it is time to start cutting expenses. And when you need to cut expenses fast and significantly, the way that that gets done is through employment. But as we start to see more profitable companies miss earnings and start to cut jobs, that means there's going to be a filter through effect to the rest of the economy. So the idea of a soft landing is no longer a soft landing. In fact, it is widely expected that we are going to feel a mild, if not a moderate recession, now that the pain of the interest rate hikes is starting to feel through the economy. And this leads to Canadian Premier Doug Ford and David Eby pleading the Bank of Canada governor to please stop with rate hikes, as they see more and more of their provincial voter base starting to feel the effects of these higher interest rates. Now, that being said, any attempt by the premiers to stop the Bank of Canada from doing what they need to do in order to get inflation down would be dangerous. So don't expect that Tiff Macklem is going to just listen to Doug Ford and Dave Eby and say, oh my God, you're right, there is a human cost to this and we need to stop. Quite frankly, the Bank of Canada governor doing anything that is suggested by any politician would lead to a significant reduction in the confidence that the Bank of Canada holds, not just from Canadians, but also from other economists all over the world. So don't expect that the premiers actually have a voice in what's going on. Now, that being said, Bank of Canada is, of course, looking at the human cost associated with the higher interest rates, and they are trying to find a balance, and that's why Goldman Sachs said that the Bank of Canada is going to skip an interest rate hike in September, which if you notice, they actually did. But According to Goldman Sachs, don't get too excited, one final rate hike in October is expected. Now, many other economists are suggesting that rate hikes are over, but some are still suggesting that you should prepare for possible rate hikes. And I would absolutely suggest that this is prudent. If you have either a fixed rate mortgage or a variable rate mortgage with a fixed or an adjustable rate payment, you should absolutely be prepared for a 1/4 to a 0.5% increase at the bare minimum before this year comes to an end. Now, I'm not saying that that will happen, but you need to expect the unexpected, especially in an environment where the momentum is clearly on this side of the rising interest rates. But thanks to the negative job numbers, which basically indicated that jobs are being lost, and the GDP numbers in Canada, it looks like the expectations for interest rates in the long term will start to go down. If you take a look at what's happened in the last couple of weeks in the Canadian bond market, which is the market in which mortgages are priced off, you can see that bond yields have come down significantly. And this is largely a sign that markets are predicting that interest rates aren't going up as fast as expected or as much as expected. In fact, there is some evidence to show that interest rates could start to come down sometime in the next 12 to 18 months. But keep in mind, every forward-looking forecast is just that, a forecast. It doesn't necessarily mean that that is what is going to happen. It is the best guess at the time that the forecast is made. Usually the data that is slightly out of date, but the time in which the forecast was made. So you cannot rely on any single economist predictions. You cannot rely on the Bank of Canada's forward-looking forecasts, and any predictions with respect to where interest rates are going to go is a guess. So the next question is, what do you do as a borrower? What do you do as a future home buyer? What do you do as a Canadian who is concerned about where interest rates are going? Well, there's a couple of things you should be doing. The first is not to expect the worst, but to prepare for the worst. Anytime you're looking at mortgage calculations, rent calculations, cost of living calculations, always do so with the expectation that things are going to get worse before they get any better, and plan for that. If it doesn't happen because you've planned for it, you will end up with some extra dollars in your pocket. Next, think of your own risk tolerance versus your partner's, if that's the case, and always err on the side of the person with the least amount of risk tolerance. So in other words, the one that's most scared of the bad things that could happen in the economy. But here's something I want you to remember. No matter what happens, in an absolute worst case scenario, you're not going to die. In all likelihood, if you haven't spent away more money than you have earned, you're probably still going to have a roof over your head, at least from a financial perspective. The habits that you create now and the actions that you take today will define your financial future. So stay tuned for more informative videos like these, and if you have any questions or need any kind of clarifications, please don't hesitate to call me. If you still don't know who I am, just go check my rating on Google and read my client reviews. Until then, take care. And if you found value or liked this video and would like to see more content, click on the boxes on the screen. Once again, my name is Preeti Rao. My contact information is in the description box below. Make sure to hit like, share, subscribe, and the bell icon so you don't miss any future videos. Thank you so much for watching, and don't forget to call me because I hold the key that opens the door to your dream home.